When global markets wobble, people look for stability. And right now, they are looking. Because across headlines, you'll see one word coming up over and over again: tariffs. Tariffs on various countries affecting everything from car parts, clothing, agriculture, to semiconductors and smart chips. The list really does go on. So what does that mean for the global economy? Disruption, fragmentation, and unsettled markets. As we've seen, tariffs have been implemented, then reversed with expiration timeframes, which has left the markets lacking clarity. It's against that backdrop that Bitcoin is quietly re-entering the haven conversation, a potential hedge against a very specific type of uncertainty. Let's unpack this a little. Tariffs are rarely just about economics. They're a signal, a sign that nations are starting to protect, control, and turn inward. They can restrict trade and increase prices. They can impact confidence in the global order of international trade and stir up the status quo. And markets sometimes aren't the biggest fans of change, especially when it can impact a range of businesses and macroeconomics. For currencies, of course, this matters, because when global trade slows, it can impact exchange rates, inflation, and monetary stability. And when that happens, the question becomes, which assets can preserve value across borders? Which assets are resistant to political shift or trade wars? Historically, people have turned to assets such as gold. As we've seen recently, gold has been pushing new all-time highs. But now, for a growing number of people and institutions, Bitcoin is becoming part of that mental model. Bitcoin is not a hedge in the traditional sense. It's volatile and isn't issued or granted by any governments. But that might be precisely the point. It doesn't need a central bank, it doesn't rely on trade policy, and it isn't backed by debt. Bitcoin is scarce, borderless, and neutral. There's only 21 million Bitcoin, that's it. It's governed by math and consensus, not politics. It can be stored without a custodian, moved without a middleman, and held and bought and sold by anyone, anywhere. So when global institutions look shaky, when fiat systems are strained by inflation or capital controls or trade breakdown, Bitcoin starts to look less like a gamble and more like a hedge against systematic fragility. Now let's be clear, this doesn't mean that Bitcoin is a perfect shield. It's not a savings account, and it won't perform predictably in every crisis. But in a world where currencies fluctuate and economic systems are increasingly politicized, Bitcoin offers a different kind of refuge, one rooted in decentralization. It's not without volatility, of course, but it does make it uncorrelated in some areas, and that's increasingly valuable. As we've seen recently, stock markets have plummeted in response to the growing uncertainty of a tariff trade war. Yet, Bitcoin, well, that's holding up pretty well, at the time of recording this video at least, in comparison to traditional markets. Remember we mentioned gold as an asset that people turn to in times of market uncertainty? Well, if we look at how much Bitcoin has outperformed gold over the last 10 years, the result is quite eye-opening and could give us an indication of where things could be in another 10 years. So here it is. Since 2015, Bitcoin has achieved returns over 290 times that of gold. Yeah, quite something, isn't it? Gold grew by 120% in the last 10 years, but Bitcoin, it's grown over 35,000%. Bitcoin is proving itself to be arguably one of the best performing assets of all time. So as tariffs rise, borders tighten, and global trust gets tested, there seems to be a shift, not just in how we trade, but also how we store value. And in that conversation, Bitcoin is no longer the outsider. It's not replacing fiat, it's there to work in harmony with it. But it is, for some, becoming a strategic fallback, a decentralized hedge in a centralized world, a global sovereign asset for an increasingly fragmented system. You don't have to be a Bitcoiner to see what's happening. You just have to pay attention. So let us know your thoughts in the comments, and I'll see you in the next one.